I think the most important thing that we really want to talk about is the fact that on the back of a return to profit growth and a solid performance, certainly in the two major divisions, schools and tertiary, the real story in our results is the continuous and increasing investment program that's been part of our lives for the last 5 or 6 years. We see it accelerating. We see it creating exciting numbers of new places in our institutions, in financial terms, increasing capacity. And this is really the investment story for the long term that ADvTECH is about. If you analyze those numbers, 4% revenue growth overall is a combination of contributions from 3 divisions, 11% revenue growth in schools, which is a meaningful real increase in student numbers. Schools is where the bulk of the investment program is directed at present, and I'll come back to that later. The tertiary division had 1% revenue growth, which is a combination of 3 different things really. Firstly, last year we had the setback in the first year enrollments, which caused the slide in the tertiary division. That feeds through into second year registrations this year, which are then also reduced. As a consequence of that, and therefore the necessary corrective action that was taken, consolidation of sites and other things that happened, the student numbers decreased. However, against those 2 negative factors, we had very good enrollments for a number of programs and brands and sites that collectively overcame that setback and enabled us to deliver a very small, admittedly, revenue growth. And then in the resourcing division, the labour unrest that influenced heavily the jobs market in South Africa in the last quarter of last year, first quarter of this year, affected us. The good news is that the second quarter was a little better and we saw an improvement, and we certainly believe that perhaps the corner has been turned there. So that gives you a sense of how that 4% revenue growth took place. As far as operating contribution is concerned, the schools division delivered a 9% operating profit improvement off the back of the 11% growth. That small margin decrease is reflective of the fact that our schools have to bear the cost of opening the new sites, and I've already mentioned the fact that the bulk of our new investment is going into schools at present. The tertiary division, where much work has been done both operationally in the short term and also in a more strategic re-engineering, we saw a 31% improvement in operating contribution. This marks the beginning of a real turnaround. We did highlight to shareholders that turnaround process was going to take a number of years, but certainly this is good progress as we move through the first year of that period. And then in the resourcing division, quite badly affected by that loss of turnover, which led to a 24% drop in operating contribution. This is still reflective of a resilient business that was able to reduce costs and therefore still yield a reasonable profit in a very tough time from a revenue perspective, and certainly a business that's holding its own from a market share and market position perspective.